It's probably time to talk about the price of gold and silver again. When we should be buying and how we'll probably be wrong about it. Just want to set our expectations at a place where if we do get it right, we're going to be that much more excited. So it's been a minute since we talked about price. A week maybe, which is probably more frequent than we need to, but last week when we talked about it, it was about a coming possible drop in price, and that possible drop actually ended up happening. Sometimes that actually works out. Now the week ahead is a little bit less clear, not because nothing is happening, more because that old driver for price is now in the back seat. The new driver is just harder to anticipate, because right now the price of gold is primarily affected by two things: the strength of the US dollar and the fear of a US debt ceiling crisis. Now, that's new because previously it had been inflation, and probably global inflation, and Fed policy first. US dollar strength and other random fears, they would have been second. It flipped on us. The takeaway there is that the price of gold is going to be harder to predict in the short term. We know about the current fear in the news cycle. It's the debt ceiling negotiations, and at least some part of that concern is actually priced in already. Once that's resolved, though, the price will probably go back to where it was before that unless something else comes up. And that's what I just mentioned happening last week. The price was falling. Now, until it does, the price could continue to go up. If we get something else that seems scary, well, it could go up even more. And it's hard to predict when fear is going to hit the news cycle. Bank closures, that was a surprise. And it's a really good example because we know what that did to gold price. Gold was trending down, we got that news, and then overnight, it was shooting up. So not only is it hard to predict a doom event, by the time most of these stories hit YouTube, well, the actual price movement is already in play. It's too late to really do anything. Unless you're a YouTuber, I guess then you can grab the coattails, you can hype it up, and you can hope you get a lot of views. But for anyone interested in what's coming for gold and silver prices, well, the movement is already happening. The predictions that just exaggerate the continuation of the issue and then they extrapolate the price movement, they don't have a good track record. We hear that the end is near, but nobody really comes back to tell us, hey, that was a false alarm. CBDCs, bank closures, Chinese real estate. We've been told the end is near over and over. On the outside, though, we're still here. The one thing that does seem somewhat predictable is that the debt ceiling issue is going to get resolved one way or another. By resolved, I mean the can is going to get kicked down the road, but some kind of conclusion will probably come even within a week. And when it comes, my guess is that we're going to see the price of gold fall. It's only been a week since we saw gold hit that 1950 mark. Well, the fear of the debt ceiling fallout, that came on strong right as it started to fall, and that pushed it back up. So early last week, I mentioned that a few analysts were citing 1950 and even 1900, and that was a few days before gold actually fell. So they were right, and those underlying conditions still exist. Now, the same analysts, they described that pullback a lot like a spring being loaded up. They mentioned a push up to $2,200 by the end of the year, and even higher once rates are lowered. So they weren't really predicting lower gold, they were just predicting a short-term pullback. Until that pivot, though, gold is, again, pretty much just inversely tracking the US dollar. And then it's bending further up or down based on fear or greed. And that's not really helpful if you're trying to schedule your next gold purchase, because we can't predict the news cycle. And I think that's actually the point here. We don't really have any concrete factors coming up that we know will move gold price one way or the other. So we're probably going to have a little bit of volatility. Now, we just know that there are events further down the line in the not too distant future that will probably push it up. So I'm looking for things like a closure to the debt ceiling talks to bring around a price dip. Hopefully I'll be able to jump on that. And then I'm expecting gains on the price through the end of the year. There's no guarantee there, of course. That's just something that I assume is coming. Silver is a little bit harder to call. I don't dive deep into that market lately. The premiums on physical, they're just still way too out of control for me to be real interested. But the past few days, we've seen spot price for silver continue to drop, and we've discovered that BlackRock picked up a pretty significant share of PSLV. So who knows, maybe silver could finally make a little bit of a run too. Now, to be clear, that isn't a prediction. But if I was excited about silver right now, those two factors together might make me a little bit more excited about it. Just take that for what it's worth. And it's not worth a lot. Gold is more about larger policy decisions and global events. US policies and US events have actually been having the largest impact lately. But my point there was to say that gold is a little bit easier to predict than silver. Now, looking back, there have been a few times that I thought silver had everything going for it, maybe even enough to fuel a big run. But I've been wrong. We would see a movement of maybe a few percentage points, not enough to get ahead of premiums. This just happens to be another one of those times where maybe there's a feeling there, a low-level feeling that someday maybe silver will jump up. Again, who knows? If I was going to sum all of this up, I would just say that avoiding some new doom event, assuming we don't get something crazy in the news cycle, we might get another shot at a gold price pullback, and a pullback without any real downside to the longer-term upside. Now, that's what I'm waiting for the moment. Again, no guarantees. That's just what I have on my radar. So let's call it good there. We're going to have to watch what happens with the debt ceiling negotiations and then be on the lookout for other doom news. If we see that debt deal, though, and no new doom, should be a good buying point. Should be. I've been wrong before. So let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. And I always appreciate your time. Take care.